What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for January 13th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the big day of core CPI, and we came in at 6.5 with expectations, essentially forecasting 6.7, down from 7.1. So what exactly does this mean? We did beat expectations a little bit, which is good to see, but again, we're still at 6.5. And the target is 2%. So, being said, we still got a long ways to go. It's good to see that we are making progress. We're dropping roughly about 0.5% every month, which is good. But to also understand that to get that far, we had to essentially apply 75-point basis move 4 different times, and then another 50-point basis move just to get to where we're at now. The question is, and what the Fed is kind of trying to gauge here is, can they put in a 50-point basis move, and that will that change the current environment when it comes to inflation? And you have to understand that it's still going to take time to see if that's going to help or not. Now, our next monetary policy isn't until the 1st of February, which is just around the corner. We've got a couple weeks away. We got some big earnings coming up as well. We are just actually tomorrow morning, we're going to have JPM and Bank of America, but which I'll get into in a second. But the inflation, where it's considered, I still see us coming in with a 50-point basis move on the 1st. I think you still need to establish that 50-point basis move in the beginning of the year, and then kind of gauge off of what needs to be done. I think front running it is still necessary just to try to allow inflation to continue to drop. They're trying to get it down to that, essentially that close to 2% is possible. They know it's not going to be 100%, and inflation might be a little high, but they have to get it down as quick as possible, and then in hopes that it stays there. And so this is when the pivot that people are trying to time. And also, it's probably the first real positive news we've been getting, as we've seen a steady decline in inflation. Again, a lot of it is not on all the important aspects of inflation have been pulled away. Food, yes, it's volatile, but again, it's a necessity. So is rent. So, being said, these things are still very much an issue. It doesn't matter if gas is down a fraction of what it was this time last year. You can't even leave your house, right? It's making it extremely hard to do anything else. And so people are placing that burden on their credit cards. It's something we've been talking about, and something that's going to unfold here in this earnings. But getting into that, as far as inflation, again, we will see on the 1st how the Fed are going to handle monetary policy. But even before then, we're going to get more data sets coming from these businesses. And again, the Fed isn't so much worried about the businesses as they are keeping wraps on inflation. But it's important to watch what's going on with the earnings, because you are dealing with the consumer. Whether that's them producing products that need to be purchased, or and providing essentially cash sources for the consumer, right? And see where they're currently standing at. And right now, we know that they're liquidating essentially non-essentials. They're liquidating luxuries right now. We have yet to really get to where they have to liquidate homes. And so, again, this is heavily weighed upon what the Fed's next move will be and how quick they do pivot. And that is all, again, gauged on inflation. Now, once inflation comes down in the headline inflation report, how much are they going to continue to try to tighten, because they're well aware of food, right? And they don't really, the tool that they have isn't a great tool in general, and so to try to they know their tools are going to affect the things that they take out of their report. And so nonetheless, if they can get the core and headline inflation down, they know what damage it does. Well, then maybe at some point it will figure itself out. Nonetheless, this is where we're at. We're not trying to be doom and gloom. I'm trying to understand the market is very strong because of it, because we're beating expectations and it's still coming down. That's a positive note. So the market will try to run. We are in an earnings cycle. We have started this. Essentially, you could almost say from a couple of days since last week. This could be started when we're roughly around that 3,800 was the start of this earnings rally as we started making our way up. The question is can we break that 4K floor or the 4K resistance? Is the question. Tomorrow, bank earnings. You're going to have JPM and you're going to have Bank of America. It's going to be extremely important. A lot of them have been forecasting a really doom and gloom 2023. So we're going to have to see how that does play out and what they're forecasting, right? Forward guidance is very sensitive during the pandemic and even more so now. And also understand that these earnings are going to come out pre-markets. We're going to get this before the market actually opens tomorrow. So we could gap down tomorrow. We could gap up tomorrow. It really just depends. If we sit flat, the undecisiveness is not a good sign. That means there's still worry and still fear there. So no matter if we came down to 6.5, there's still a lot of worry and concern with the Fed and how quick the Fed are going to pivot. And again, they've said they're not going to. It doesn't mean the market won't pivot and continue to run up. But if there's any doubt that that's not going to happen, that rates will continue to be increased, then the market will sell off again. So the hope that we have that this continuing essentially deflation at some point is helping. And so we're going to have to, we'll see what happens tomorrow. And then again, tomorrow in the weekly update, I'll break down more so what other earnings to be watching next week. I do believe Netflix reports next week. So we'll have a big tech next week. We do have some more banks, I think on Monday or Tuesday. And so that'll give more insight. So in the weekly update, we'll be able to really focus on what specific earnings we should be watching throughout the week. It will be important. Semis did report today as well. I believe they actually did fairly well. So that is also feeling some potential upside into what could be coming. But again, we have a solid wall here at 4K. The market has held it very well. Again, it's indecisive candle here. Could potentially actually break out here. I'm not much of I don't gauge a lot based off of candles. I know there's like a death candle and all that kind of stuff. I don't really pay attention to that stuff. That stuff really doesn't work out in my opinion. I'm very much intraday. So unless this could actually potentially pop over the 4K and start running, maybe, but we need the banks to come through. If the banks don't come through, this thing could sell off. I mean, you could even look at this and say this could be an ascending wedge. Right, if you want to play that game, this is the game you're playing. As this could be leading into a pretty big drop here. And this is one of the very few patterns that have actually been working in this market since the past year. Some patterns worked a couple of years before that, but aside from that, like this is one of the very few patterns that actually works. And every time you actually get a breakout of a down channel, it's always broke back down into the down channel after a breakout. So it'll be interesting to see how this ascending wedge does play out tomorrow. If we do find ourselves breaking back below that, it's not going to be a good sign. That means essentially that we've made a higher low here, and that we could be potentially seeing the bottom of this channel, which is way down here, roughly around the 33. And I'm thinking if we do by chance sell at all, if we get some heavy selling, I think 32 is probably my mark. There's no real logic behind that, but 32 sounds like a good number to me. I know the 3K mark is what Goldman Sachs, I think, was predicting. I think, again, it really depends on the timing and what is driving that push down. Because right now, again, the market is pushing on hope. First of all, you are in earnings mode. Earnings mode always rallies. Plus, you got some hope that we're got the continued decline in inflation, and then you have some positive chip news today as well. So that does help to some extent. So again, we'll see what happens tomorrow. Bitcoin actually popped quite a bit today as well. So we'll see how that does. Again, that 20K mark is really kind of what you're looking at there. It's a good sign. Again, Bitcoin will run with essentially the markets, I think, moving forward from this point, and I think it will actually break away and potentially start running pretty far on its own moving forward. So we're going to have to see about that. But the dollar in itself, it's breaking down. Looks like it's actually breaking down over 102, which is something I've talked about. If you are a bull, you want this to break down. And if actually the dollar starts to sell beyond 102 tomorrow, if it drops below 102 tomorrow and starts really selling off, that could be a really great sign for the bulls. Otherwise, if for some reason this thing pops back over and stays above 102 and starts pushing back up, it can be concerning for the bulls. Again, you need a bigger catalyst. You need new bad news for the market to really start selling off heavy. There's a lot of my thesis is still the same. There's still some really bad things going on, and it's going to cause a catalyst that will sink the market. The question is how far can we rally before that happens? How far can you keep the consumer in this pressure cooker before they explode? And then what happens at that point is kind of my thing. And so risk management is always a big thing, but even more so now. You have to be very careful with these pumps because it could rally, right? Like the market could rally really strong and then just absolutely nothing happen. This thing sink, right? Elevator down, and we make new lows. And so something to consider. Tech, again, holding, but not strong. The consolidation is good in a sense, in my opinion. I think it definitely means that we could potentially flip and start running. Strong possibility. I think that could happen, but we have to see how this does play out. So watching Tesla, again, Tesla had so much bad news. Once this thing actually starts going, it's going to really grow some legs and really start ripping up. If it does, if we can get tech to back everything, that'd be good, because I've been talking about the overextension on the financials and for value as well. So Apple, again, still slowly making its way back up. We'll see how it does moving forward. But again, another descending wedge. You can see it here, just like the market. So just be mindful of that. There was a lot of tech that was essentially brought into SPX when we had that massive push, and now the SPX has kind of been suffering for it. This is why you're seeing a lot of the heavier weighted value in the financials like pushing up. Again, still there's tons of issues in the world right now, so to think that this thing won't come down, again, very overextended move. It's still breaking out though, so we'll see. You can only go so far and continue to push up before this thing starts pushing down. So to think that it won't, right? I can continue to push up as much as I want, and that's fine. But in my opinion, I would never take a position that's way up here. I would wait till it came down to a base level that I liked and consolidated for a while, kind of like Tesla's doing. But I don't like this way overextended move and then say buy here after the breakout, because whatever you get a move out of here might essentially wick back down and we might start selling pretty hard. So again, we'll see. JPM, again, earnings tomorrow. We'll see how that does play out. It did break out essentially over the 139 and looks like it's retesting. If they do great tomorrow, we could get an extended run here. Again, All depends on earnings. I'm not really sure how bad. If these banks start flipping tomorrow, that's going to be a really bad sign. So just keep an eye on that. But right now, again, this thing could push up quite a bit. Got some room up to the 130, 143. A pretty hard resistance there at 143. We haven't really seen that in a minute either. But if we could break back above that, maybe up to 158. Again, this is the banks don't move too crazy, so it would take some time to get up to that point. But if we do start to rally, and again, any rally, you just have to be aware that there's other things in the background that are going on because of, yes, we could have potentially tackled one issue, but it's also growing another massive, bigger issue that alone by itself has taken down markets, and that's what is essentially developing from what is currently going on with this battle against inflation. Yes, we could be winning, but you're also again creating another bigger issue on the side because of what you're doing and the tools that you're using to essentially suppress inflation where it's at. So GS again pushing up. Wouldn't be surprised. It's up to 380 for the rollover. Again, really tomorrow, this could be a higher low. It still hasn't even touched actually at 375. So again, depending on the banks tomorrow, we'll definitely get some movement there. But that is oh, bless me. Again, that's pretty much all I have. There's no point going over too much else right now. Again, I captured a lot of what I wanted to talk about in the beginning half of this video, and that was inflation. Again, it's great to see we are making progress, and I'm not trying to diminish that. Again, I am a perma bull, but again, you have to understand that just because we won one battle, we still haven't won the war. There's another battle brewing that we're going to essentially get kicked in the teeth if it doesn't get fixed, and I don't see it getting fixed soon. The Fed have made that well aware, so continue to put this thing in the pressure cooker until something pops is what is currently going on, and that downfall is you're seeing it play out as people are trying to make up for the fact that the rest of the market's crap, so they're buying financials and value in hopes that that will be the big runners. And again, it can run as much as it wants, but just be mindful that risk management is very, very key in this market because it could very well flip and start selling off really heavily. So we'll see. We'll wait. We'll see tomorrow. Tomorrow we'll have overnight digestion and then go from there. So if you made this far, go ahead and drop a like button. Until next time, I'll see you guys later.